Go back to the daily chart, there's this little, what we would call a shelf right over here where price of gold kept on hammering and hammering, hammering. Look at right here, here, along here, and then over here, and then finally broke out. And so there's a tendency in charting where once you break out from these levels, you get that big push up like we've seen, but at some point it comes back in to retest it. I call it the scene of the crime retrace. Once it does that, then it can make its next move to the upside. So essentially what this would almost make a lot of sense, right? Imagine all those people that are buying gold up here, if they flush down gold to, let's say, a Pierce of 2,500, if it were to just go a fraction below 2,500, a lot of those people will get scared, exit their positions, and then the bull move can start up again. So I'm kind of looking for a pullback off this 2,660 level back to 2,500, and then that next leg towards 3,000 should begin.
Gold has been on a remarkable six-day rally, pushing toward a new record high of $2,686 before encountering resistance that led to an intraday pullback. The price surge has been driven by continuous higher daily highs and lows since its last pullback low of $2,547, leaving the market extended and at risk of a potential pause. Key resistance is emerging around $2,661, with support identified at $2,633 and $2,600. However, a decisive break above these levels could continue the bullish trend. Despite the possibility of a pullback, there are currently no signs that the rally is losing steam. A breakthrough above the high of $2,686 would likely signal a continuation of the upward trend, potentially pushing gold toward the next resistance zone near $2,724. This marks a crucial point for traders and investors watching the market closely. Renowned technical analyst Gareth Soloway, who has over 2 decades of experience in the financial markets, remains bullish on gold in the mid to long term. According to Soloway, gold may see a short-term pullback to around $2,500 from its recent high of $2,660. If it dips below $2,500, it could trigger investor panic, setting the stage for the next move towards $3,000. Soloway notes a connection between the 1980 and 2011 bull market highs using a logarithmic chart, suggesting a possible correction before the next rally. While the potential for a pullback looms, the bullish momentum could override this, especially if gold decisively advances beyond its latest high. Should this occur, the precious metal has a strong chance of moving into uncharted territory, surpassing $2,700 per ounce, a psychologically significant threshold that would set a new record for gold and any precious metal in history, including silver. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
So if you're looking mid to long term, there's a massive amount of upside still in gold. And I know, I think the last time we talked, it was at 2,100. So we've already come quite a bit higher than that. But one of the things I do want to mention, so there's a difference in time frames, right? If you're looking mid to long term, I remain very, very bullish. We just hit, though, my next target price, which was 2,600. I want to show you how I came up with that price. So what I do is I flip to the logarithmic chart on TradingView here. And what I did was I said, okay, well, what if we zoom out and we go back to our previous bull market cycles? And so if we do that, we see that in 1980, we had this high. We connected to the high from 2011, the bull market high there. But look at what we just tagged here, that same trend line. So based on technical analysis, this tells me in the very short term, you might get some sort of retrace in gold, which almost makes a lot of sense because in all fairness, I think you mentioned this before we started recording as well, is that there's so much hype out there. So many people are jumping on the bandwagon of gold. And one of the things I've learned in trading is that when everyone jumps on, it usually has to shake those weak hands out. The hardcore people like us, we're going to be riding this even after a pullback. But there's a lot of weaker hands that think, oh, this is easy money. They need to get whipped out first. So in the very short term, I'm looking for a pullback to 2,500. And then the next leg to 3,000 should begin at that point in time. So if we look here, I mean, this would be a crazy pullback. I don't think that's what we're going to get. But I will show you, if we go back to the daily chart, there's this little, what we would call a shelf right over here where price of gold kept on hammering and hammering, hammering. Look at right here, here, along here, and then over here, and then finally broke out. And so there's a tendency in charting where once you break out from these levels, you get that big push up like we've seen. But at some point, it comes back in to retest it. I call it the scene of the crime retrace. Once it does that, then it can make its next move to the upside. So essentially what this would almost make a lot of sense, right? Imagine all those people that are buying gold up here. If they flush down gold to, let's say, a Pierce of 2,500, if it were to just go a fraction below 2,500, a lot of those people will get scared, exit their positions, and then the bull move can start up again. So I'm kind of looking for a pullback off this 2660 level back to 2,500, and then that next leg towards 3,000 should begin. But I think you're right on this when you talked about the dollar, right? The dollar ultimately, to me, looks like it's going lower, which means your mid to long-term view of gold just it's going to go higher. There's a couple. So we know that the 3,000 even number is probably the next big number. It's an even number. These huge even numbers get a lot of notoriety. Price likes to get drawn to them. I will say that there is a kind of a crazy technique that I was doing to try to figure out where the ultimate upside on gold would be. And I'll show you guys this real quick. And this is, listen, the accuracy of this to a dollar, not even close, but it's still very, very fascinating. So if we take a look at the 1970s run on gold, what do we see? Well, we saw from the low here in 76 to the high here, it was about, what was that? About 800% move. And then if we take the low from the 2001 lows to the highs of 2011, it's about a 650% move. Now, if you average those two out, it's about a 725% move. So if we talk about this was a bull market, this was a bull market, if we just replicate that type of move, and I got to really go and drag this out, from the lows in 2016, you're talking about a 700%, let's just say 700% move on gold, and that would bring us all the way up to about 8,500. So again, listen, that's for us that are bulls, that's like a dream, right? I mean, if we all dream about it, maybe it'll happen. I'm just using that one simple tool of saying what's the average run in every bull market since 1970s, and that would give us an $8,500 price target. Now, if you go back to saying, well, what causes us to go there? Well, we have a lot of factors, right? You have global instability that's just getting worse. You have the U.S. national debt, which is just keep going up, and all these central banks just continuing to lower rates and print money. So there's a lot of reasons why it could do that. But again, that's kind of the pipe dream. If it could get there, that would be awesome.
Gareth Soloway suggests that once silver is perceived as a safe haven asset again, it could outperform gold by a factor of 3. With its smaller market cap, silver is more susceptible to manipulation and sharp price movements. A decisive break above critical levels, such as $32.50, could trigger significant short squeezes and lead to substantial price surges. Silver prices are correcting to around $31.60 during Friday's European session, after encountering selling pressure following a fresh decade high of $32.70 on Thursday. Despite this slight decline, the near-term outlook for silver remains bullish, as all short to long-term exponential moving averages are trending upward. Year-to-date, COMEX silver prices have appreciated by over 34%, outperforming COMEX gold, which has risen by 29%. This rally in silver is attributed to several factors, including a weak U.S. dollar, rising geopolitical risks, strong safe haven demand, increased industrial usage, and growing jewelry demand. These elements collectively serve as catalysts for silver's price movements, reinforcing its potential for further gains. Let's get back to the interview.
At this stage, it's now gold in a league of its own, and silver is behaving much more like copper as an industrial metal. And no better example of this than just yesterday. This is the chart of copper. Look at this massive green candle right here. And then if we flip over to silver, we can see right here, look at this big green candle on silver yesterday as well. And again, think about what caused this. Why did copper rally? Well, it was because the Chinese introduced massive stimulus measures. And that, again, is an industrial factor, a strengthening of the economy that should, in theory, boost demand for industrial metals. And therefore, again, copper rallied, and now we see silver rally as well. I do think eventually it will, right? So right now there's this kind of like everyone's infatuated with gold, Bitcoin to some extent as well. But I do think that at some point, silver becomes the next one to go. And at that point, I do think you see a lot of upside in silver. The question is, at what point? Do we have to get into a recession and then there's still demand for silver and people start seeing that again, where it's like, okay, well, people still want to have silver in their homes as a safety asset versus just the industrial side. But I do think that, again, like you said, as of now, people have to just accept that until it changes, this is more of an industrial metal and it's behaving just like that.
Yeah, no, I do agree. It proves my point, but I'm not saying it's not a precious metal. It just behaves like one right now. And once that changes, once that switch gets flicked, silver's off to the races and will perform gold 3-1.
And I also think it's important to remember that the silver market per market cap is not huge. So it can be manipulated. There can be other factors involved there as well. But then likely you will see, like, once it breaks key levels, whether that's $32.50, you will see bigger short squeezes in that market where people start to chase it. And because it's a smaller market cap market, the moves will be much, much bigger. And we've seen that in the past as well when silver's gone on crazy runs. I think that the main price target here you have to start looking at. So, I mean, just in the short term, 32.50, right? If we break through 32.50, there's this pivot from 2012, which is around 35. That would be your next level. And then following that around 37 and change. But for me, at least, when I zoom out, the obvious one here is this level up here. You have your 1980 high connected right across here, and then this high right here from, I think that was 2011. So, at some point, I think even maybe when we break 35, you might see one of those squeezes to the upside that take us up to this $48 to $50 level. Once we get there, that's the trickier thing, because it would be in unexposed territory if it gets above $50, where it's never been before. So then we would have to go into kind of these gold analysis points where it's at all-time highs, and we'd have to evaluate it there.
Gold has experienced a notable rally, approaching a new record high while facing potential resistance and support levels that could influence its future movements. Analysts remain optimistic about gold's long-term prospects, even as short-term pullbacks may occur. Meanwhile, silver is also positioned for solid performance, driven by increased industrial demand and a weaker dollar. As both metals continue to show bullish trends, traders should closely monitor key price levels that could trigger significant market shifts. What key resistance and support levels should investors focus on to gauge the potential future movements of gold and silver? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.